AVV Nation, all of YouTube, what's going on? It's Patrick with VectorVest, back with you guys once again to start your week. So this week we do have some major economic news that we want to make sure you guys, our viewers out there, are paying attention to and aware of, so you don't get caught off guard with what's going on here in the markets and can stay on top of things. Make sure, as always, to help us out, to like the video, subscribe if you're not already subscribed. Helps us out with the YouTube algorithms, doesn't cost you a thing, so you might as well do it. And without further ado, let's jump right into it here today. All right, welcome back everybody. So I wanted to start off on investing.com, and if you're not familiar with it, it's a great free resource to find an economic calendar, so that way you can stay on top of what's coming up in terms of economic news for the week. So as I stated at the very beginning, we have some major economic news that could really help gain some insight on which way the main drivers of this market, aka the Fed, are considering moving going forward. So as last week, we watched the Fed talk during our AMA, and one of the key things that they said is that they're going to be keeping an eye on the data as it comes and acting accordingly. So we have a little bit of time before the next Fed minutes, but we definitely want to make sure we're paying close attention to this to see if we can gain some insight on what the Fed may be thinking. So starting off here, today's Monday, obviously, nothing really that we can watch or keep an eye on right now. But we did have some Fed members speaking throughout the session here today, so make sure to check the markets, see how they're acting after the Fed or the Fed members finish speaking. But coming into Tuesday we have some energy outlook data, so definitely a time you want to be careful of at the noon Eastern time. And then Wednesday, we have some more Fed members speaking, and even though they talk about mortgage applications and mortgage delinquency rates as a low impact data set, well, that was before you had major banks stating that they're seeing new applications dropping 90%. So while they say that it's a low impact news event, this could be something to keep an eye on as we move forward, as interest rates continue to climb and as housing continues to see depressing results and continuation to the downside here. But then we get to Thursday, and Thursday is really the big day that you all need to be aware of here this week. Thursday, we get CPI data, not only for month over month and year over year, but we also get the core CPI and the regular CPI. Now, the core CPI is what the Fed keeps an eye on. The regular CPI, or just CPI, is really what the overall market tends to look at. So the core CPI for the year over year, previously at 6.6%, so they're expecting it to be 6.5% at this next reading. Now, regular CPI, or regular inflation, was last read at 8.2. Now they're expecting 8%, which is still extremely elevated. So here's how we want to be prepared. If CPI comes in at 8% or lower, expect the markets to run. If it comes in above at 8.1 or higher, expect the markets to continue to sell off. Now, let's go ahead and take a visual look at this as well. So we'll go ahead and switch it over real fast. All right, and now to see that visual representation, what we're looking at is the market climate. It's something that can be found in any VectorVest 7 account. And if you don't have access to this, make sure to click on the link down in the description below. Sign up now for the free trial, so that way you can have this kind of information easily accessible to you. What we're looking at the very top is the CPI, or inflation data. Then we have the T-bills at the middle. And then at the very bottom, a proprietary indicator just found inside of VectorVest, the ETI, or the earnings trend indicator. Now, here at VectorVest, we state time and time again for many years now that earnings is the engine that drives stock prices higher. When looking at the ETI, it's cast on a scale of 0 to 2 to make it easy for you. And what it's doing is it's analyzing the trend of the earnings of the S&P 500. So what we can see is, yes, it has been cooling off here over the last few months, but it still remains above 1. So therefore, that tells us earnings are still growing, but just not quite as fast as they were previously. But this is why looking at the CPI data that comes out on Thursday is going to be so insightful, because we have started noticing that inflation has been pulling back slightly here. Not a whole lot, still remains once again above that 8% level. But if we could drop below that 8%, the psychological benefit or impact this would have on the market would definitely be a positive for a short-term market rally. We can see the T-bills continue to rise as they continue to raise interest rates. And looking at it here, earnings seem to have peaked really right at the beginning of 2022. Now, inflation started well before that, and the Fed's reaction started once again right at the beginning of 2022. So the Fed seems to be well behind the curve, and we're already seeing the impact of the rates being hiked up even higher on earnings overall. So if inflation doesn't start coming down significantly in the near future, expect to see the ETI cross below 1 at some point very soon. But to stay on top of that, make sure, as always, watch the Daily Color Guard Report, especially on Fridays. We cover all of this data for you every single week to make sure you stay up to date with it. So basically what this data is showing is inflation really started once we got that COVID rally, or the COVID pandemic rally, at the end of March of 2020. And the Fed was extremely late to the punch to really try to tame the inflation beast, if you will. And we're now finally starting to see the effects realistically since about the end of the first quarter of this year on companies' earnings. And that is definitely driving it lower. If they continue to raise rates, that's going to drive this down even faster. So once the ETI crosses below that level of 1, that tells us earnings aren't growing anymore, earnings are falling, and therefore the engine that drives the stock prices higher over time is basically stalled out, so you need to be extremely careful. So on that, once again, thank you all for tuning in. Let me know your thoughts down below, what you expect to see the CPI reading come out on Thursday as. I believe personally, I think I'll see it at 8% or higher, but I could be wrong. Let me know your thoughts down below though. And also one last thing, don't forget, hang out with us tomorrow at noon Eastern right here on the VectorVest YouTube channel as I kick off our 3rd week for Trading for Charity, where we're doing some live trading, helping you guys learn how to become more successful investors, and also raising money for Levine Children's Hospital to make this holiday season brighter for the kids there. So with that, thank you all for hanging out with me. Be cautious this week, be prepared, and without further ado, toodles!